Yo, what is up, guys? It is Hack back with another trade recap. We had an amazing day today. We made some money on a combine. We had some copy traded consistency days that actually turned into us taking a absolutely beautiful short for 67 points. Relax. 67 points to the downside. Absolutely beautiful trade. So, without further ado, as we always do, let's dive into the bias and then let's talk about the trade and break it down. So, into today, we had some beautiful plans. Look at all the members just sending their plans, staying locked in. Love to see it. Into today, I actually was coming in pretty neutral. We do have FOMC, just minutes, no press conference, but minutes later in the day today at 2 p.m. So I was coming in pretty aware of that. I had a slight bearish bias. I still want to see this market maker sell model play out to the downside. I still want to see us sell off, but I understand that overnight we were forming some higher lows. We had an hourly bearish fair value gap as well as a 4-hour inverse. I don't really give that too much weight, especially when we start to see buying off of high liquidity levels like we saw yesterday. Now the market was red, and now it's up all the way 1.35%. We did have some news and headlines that drove us back into the mid, already 29,300 as we speak. So pretty crazy. We started the morning right around 29,100. So yeah, pretty nuts. But I was looking to see sellers really step up in the 150 to 220 area, 29,150, 29,220. That did happen. It did look pretty good. But today I didn't have the most clear plan. How yesterday we absolutely smacked our bias. Today wasn't really like that. I had to let price kind of feel out, understand what I wanted to look at. I still do want to see us trend lower, but obviously the market is going to go where it will go. I am not trying to predict. I am trying to react. So exactly. But yeah, my plan wasn't anything crazy today. I definitely did think we wanted to go higher. So yeah, without further ado, let's break it down. I do have everything off the chart here just to start. So I want to go to the 15-minute and I want to highlight right at 9:30 open here. We had this 15-minute gap that wasn't really that big. It was about 25 points. I wanted to see if we would actually respect this, and I did expect some chop in this area, especially with FOMC later. As you can see, we were in a bit of a range here from about 4:15 in the morning to the highs about 6:30 and then about 8:30. So from about 4:30 to 8:30, we were in about 100, 110, 111 point range of price kind of just chopping in an area, which was completely fine, really waiting for the market to open, seeing what would happen. But the first 15 minutes of open, I did try to be really, really patient. I did take one or two small scalps. Basically, it was up a consistency day from those trades at about 9:45. But I wanted to see what we would do with this first 15-minute candle. Now, I did notice on the 5-minute and the 15-minute that we did start to form a bearish trend. Now, we had this low. We put these lows in at 9:45. We had these highs. And I just kind of sketch this out. I take a line and I make it like a dashed line, so it's not really taking up a lot of my energy on the screen. On the 5-minute, 15-minute, I did want to see us continue to just kind of trade this trend. I mean, trend lines are great to use when you're trying to see where price wants to go. Of course, on the 1-minute, 2-minute, you'll see that we kind of start to break out of it and stuff, but you want to really look for those 5-minute, 15-minute body candle closures. And you can see that these candles were very manipulative. And after we started to manipulate at the highs, we got this candle that was super, super bearish. Close back within this range, right? It's okay if the wicks go outside, but on the 5-minute specifically here, I want to see the bodies close inside to actually validate my trend. And we do see that here. We see both of these bodies close. We actually get in during this 5-minute candle, and I will show you exactly how we did that. Now, price is very volatile. How did we manage volatility in this area? So the first part, when we really started to form our short idea, were these candles, because these candles allow us to use standard deviation. And I want you guys to really take note of this. I'm going to understand how volume absorption and standard deviation paired together to give us a clear target. We didn't bottom tick, but for the moment, we basically got an amazing exit out of this trade to take all of our size off and be out of it. I did also record this trade, so you will see that on YouTube, probably Instagram, TikTok as well. So look out for that once I get around to editing it today. But I just wanted to get this recap out for you guys. So if I take my standard deviation like we always do, after this 950 candle, after this candle closes, I did use standard deviation here, and you saw that the 2 would bring us down to the low. The 2.5 would bring us down to the range. And this was the craziest part because I said I wanted 29,000. I knew this was also a target. We could have held for 100, 120 points to this low, or we could have held to the stress-free take profit that we had, which is what we did to get money off the table and really just lock it in. But you will see the 2.5 of standard deviation here like literally lines up like basically to the tick with where we bottom ticked off of our trend and then ripped 400 points from there. So that was crazy alone. But if you take your standard deviation of this manipulation from, like we said, the top of the wick down to the body, where we TP'd matches up perfectly with about the 2.5 to 2.75. Now, I have standard deviation education in the Discord and stuff like that in the WAP. talking about the 2.75 and how I like to use that as my target. Now, if we drop down and really analyze this trade like we're going to here, look where we TP'd, right at about the 2.5, closer to the 2.75. If you TP'd closer to the 2.75, you would have caught an extra 4 or 5 points, and you would have virtually bottom ticked, because then for the next 4 or 5 minutes, we chopped back up, maybe would have break even us, and then eventually did hit full TP. But again, 67 points on 8 micros is 67 points. I was very, very happy about it. An amazing trade. So let's talk about this trade. So obviously our 5-minute standard deviation did mix with volume absorption to help us get our target. Now, I was explaining this in the Discord on the live call, what I mean when I say volume absorption. So I'm going to show you right now. When I talk about volume absorption, you're basically looking for some of the most active areas. Now, I use order flow, but for the people that don't have the same flow tools and stuff like that, it is very easy, and this is how you find volume absorption on your chart. You are going to look for areas that wicks entered into, and where a lot of bodies on the 1 minute, 2 minutes, specifically when I'm targeting my take profits, the 1 minute, 2 minute, where there are wicks and a lot of bodies opening / closing, but mostly opening, like one candle closing and another candle opening. That is where you're seeing volume close on these time frames, and you want to be able to use that as a tool. Now, I wouldn't just be targeting levels of volume absorption blindly. That can be a little hard. In this example, standard deviation perfectly lined up with the area that I wanted to see us trade to, because a lot of people will ask, right? I just messed this up. Let me fix this. A lot of people will ask, Hack, why are you not just targeting to the clear 939 New York AM low in this scenario? Because this was the low of day during the session at this time that obviously got swept and then price reversed. Why am I not targeting that? Is because on a day like today, where sellers were coming in but buyers were stepping up really quickly, instead of targeting 100 points, why not just target a clearly defined level right here on the 1 minute? For example, we have a 1 minute wick from right before open, so 929, 930. You have these candles on the 1 minute that come into this area and get defended, but you see all these candles. Look at these two candles specifically, close and open inside of this about 20-point volume absorption level. Then you see the candles, you see all the buying with these candles stacking, opening, closing in relatively similar places. You see it continue to return to this area and then reverse. So we use that as our target to actually catch our downside. And this was a very, very clean trade. So that's what volume absorption is. Areas with a lot of wicks with candles that also open and close. If you want price to reverse and come down and revisit that area, that can be a very realistic target to either go break even and trim some size, or just take full TP like we did in this scenario. So I hope that understands. I had a few of you in the Discord ask what I meant by volume absorption on the call. So I hope that makes sense. Honestly, it's the same thing when I talk about significant levels, volume absorption. It's a very similar concept. It's just areas of the market where price wants to trade to, and price shows you that it wants to trade that way because it continues to come to that way. And you can see when it gets to that area, buyers and sellers have a very clear relationship, like an auction in that area. And you can see this, that's represented here as we hold this area. Buyers step up. In this area, sellers drive price very aggressively right to this area. Notice how price slows down in this area because buying continues to come in this area. We want to trade down to this level, assuming that buyers will want to defend this area again. It's a very safe area to take your profits off the table. So along with that understanding, we had clear break-even points, as you can see with this trade, right? We had this internal low that we just left behind before we entered when we pulled back to the EMAs. We had these two lows. I actually didn't use this low. It was just this first low as our break even. We continued to reject the EMAs, and we got a very nice move down. Just about a 2-3 minute trade right down to our volume absorption level, which is also about the 2.75. So really, really good there. As we can see, 1 minute, 2 minute, we stacked 1 minute candles. As you guys know with my entry criteria, we actually have 2 different 1 minute gaps protecting our stop loss. Also on the 2 minute, the EMAs cross under. We also crossed under the VWAP on the lower time frames. If I go to the 15 second, I'm gonna have to scroll back a bit. As you guys know, I love my 15-second entries. Here we are, right? We had the EMAs cross as well here. Let's go back to the 1 minute. Had the EMAs cross here. I don't know why my VWAP is in a different spot than it is on my other chart. I need to fix that, but we were trading on here. We did cross under the VWAP at the time, so that was very, very nice. We had the stacked 1 minute fair value gaps and the 15-second rejection. I want you guys to understand and this is why I love Top Step X, because on TradingView, you don't really get this experience. Once I see this candle on the 15-second, 30-second, and close on the 1 minute, get rejected, tap into the 0.5 of this 1 minute gap, get rejected, and the body close under the EMA, we are in basically instantly our stop loss to that last high, that wick that we just left behind. So that's how we generate our stop loss here. Originally, you could do this. This is still 1.8 RR, but as we start to move down, I will lower it because I don't really want to see this area retested. If we have another 1 minute candle come up here, that would say that all this selling isn't actually as strong as we think it is, because price really should not return 30 points back up after a 30-point rejection like that into two stacked 1 minute gaps with the EMAs crossing under on the 1 minute and the bodies closing below the EMA 8. With all of those confluences stacked through the backtesting, the data that I've collected, we should not retest that high. And as you can see, we didn't. We tapped back into the smaller 1 minute gap as well as this one. Again, we tapped into all this liquidity that was left behind, another volume absorption level. Wicks right here, Wicks right here, eventually made this move up. We push back down. This candle closes back higher. We push through this. We try to climb back up, gets rejected. A lot of volume being absorbed here and here. And where did I generate that from? From the 29.050s to the 25.150s. I just told you guys all morning we chopped in about 100, 120 point range. And you can see these same volume levels from 4 or 5 a.m. kind of come into effect here. So note that as well. And yeah, just using order flow and obviously our 5-minute trendline liquidity to drive price down. This wasn't a setup, maybe not the most traditional setup that you guys will see me play, but nevertheless, I mean, an amazing setup. We put 8 micros on. Once we got to our break-even level, we trimmed 3 out of 8 micros, so we left 5 micros on, and we hit full TP. And it was a great trade to end the day, up a few thousand on our funded accounts on the day, and some combine gains. I mean, like, what else could you really say? We started off up a few hundred, and we extended that to make even more. So really, really good day. Very happy about it. Excited to get some more payouts coming soon. Shout out Alpha Futures. Huge 50% sale running right now. If you follow me on Instagram, go to my caption to follow the rules. Let's get you in on this giveaway. Maybe win an account. But yeah, that's going to be the trade recap. I appreciate you guys. I hope you guys watched the whole thing, stayed through. And yeah, much love, guys. Hope you enjoyed. Peace.